Silver has just broken through its 1980s peak and is holding sustainably above $60 an ounce, shattering a ceiling that stood for 45 years. And the forces driving the surge are not relenting, so there's still plenty of opportunity to benefit from silver's upward trajectory. Now, a major force behind silver's surge is strong industrial demand. The Silver Institute and Oxford Economics wrote, as digitization and AI adoption accelerate, so too does demand for critical materials involved in their applications, silver a critical one among them. Now, it conducts electricity better than gold or copper, making it essential for electric vehicles, advanced batteries, and solar panels. The relentless expansion of artificial intelligence is pushing up silver prices as it also pushes up the stock market. This wide range of growing applications has made silver not only a financial asset, but also a very key industrial resource. Manufacturers across sectors, as well as investors, are competing for the same limited supply. And investment interest in silver has surged as well. With gold breaking its own records earlier this year, some investors shifted towards silver as a more affordable precious metal with greater upside potential. But once silver broke through that decades-old psychological ceiling, momentum just accelerated. And so retail traders have taken sharp notice of that surge. Pullbacks are being used as opportunities for investors to add to positions, suggesting confidence that prices will continue climbing. Now, the move above $60 an ounce is seen as both a technical and a very psychological milestone that could easily move silver from spiking to a durable support level. Now, Federal Reserve policy is also a very key driver of silver's current run. The U.S. central bank is widely expected to cut interest rates very further, and lower rates reduce the benefit of holding cash or short-term bonds. And as those returns fall, investors look towards assets that preserve purchasing power like gold and silver. Historically, silver performs strongest in the second half of rate cut cycles. If we look at earlier cycles such as the early 2000s, 2008, 2020, silver often found a bottom near the midpoint of that cycle, and then it surged more than 300% over the following 12 to 18 months. Many analysts believe that today's elevated prices may still be early in that next major move. And then you have a weak US dollar, which adds even more support. Dollar weakness makes commodities more affordable for major buyers in countries like China and India, which increases global demand. And additionally, if we look at supply and demand, supply of silver is shrinking while demand grows. Demand has outpaced supply consistently for years, and silver production is very difficult to ramp up quickly. Most global silver output comes from mines that are primarily extracting other metals such as copper, lead, or gold, and silver as a byproduct. This really limits how fast production can increase. Global silver usage has been running at nearly a 250 million ounce per year deficit compared to supply output for the last 5 years. Now, this is unquestionably a tight market. Stocks are falling, and traders want whatever scraps of silver they can get their hands on. This was written by Chris Weston, the head of research at Pepperstone. Nearly 80% of London's remaining silver stocks are now held in exchange-traded funds, and that leaves much less metal available for immediate use. Market conditions are thin enough to raise the risk of a short squeeze where competition for very limited physical supply forces prices to skyrocket. And experts across the financial and industrial sectors point to strong fundamentals behind this move that we're seeing. Now, Philip Giselles of BNP Paribas said, "Silver's setup means the stage is set for silver's march towards $100 per ounce, and that he would not be surprised to see silver well north of $100 in the not-too-distant future." He calls this potentially one of the largest bull markets in history. Brandon Aversano of the Alloy Market said that the tightening physical supply and central bank buying could push the price of silver to over $100 per troy ounce during this bull run. And Equity Management Associates said that the deeply entrenched structural deficit means that silver could easily reach $100 per ounce. They see a base path of around $75 by mid-2026 and $80 to $90 an ounce by the year end of 2026. And as some caution that silver is more cyclical than gold, they agree that current market forces are powerful and very widespread. And many expect silver prices to remain high in the coming months and coming years. Now, with demand rising, supply tightening, and prices hitting historic levels, many Americans are turning towards physical silver to protect their wealth during uncertain times. And so if you're interested in learning about how to add silver to your retirement accounts or your investment portfolios, I'm Mackay Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical precious metals to your portfolio can give you the exposure and the hedge that you're looking for.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.